Hello traders, today is Thursday, March 23rd. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. We just got the release of initial jobs claims in the United States, slightly higher than expected, 258,000. Continuing claims slightly below expectations. Not a major market mover, but I thought I'd bring that up real quick. Good morning to everyone here in the room. Carlos, Mark, special good morning to Kelly. Great to have you back. Pete, Pooja, Steve. Good to see everyone here in the room. So I hope you've been catching some of this price action. We've had some select setups on the CAD crosses yesterday, the Aussie crosses yesterday. Aussie, the weakest performer so far on the session today. Quick look at relative performance ahead of the U.S. Open as the Aussie down 0.49%, biggest loser on the session. Biggest gainer, the yen, okay, up 0.19%. Now that puts dollar yen at near-term support. Jamie caught the really nice entry as far as the dollar yen long on the swing side of things, but we'll be looking to see if we can see some material strength in dollar yen. That would suggest that the strength you're seeing here is going to subside. Certainly you are seeing equity markets a little bit of a rebound here today, so we'll be looking to see what goes on some of these yen crosses. On the menu for today, we'll start off with the DXY, Aussie dollar, Aussie CAD, Kiwi CAD, and Euro Aus from last night's update. We'll take a quick segue to the previous update on Sterling Kiwi and Kiwi dollar. It was a flop yesterday with RBNZ. We didn't get anything new, no new commentary. They played the tight wire really well, so you didn't see much volatility on that, but that still keeps the focus on the technicals on the Kiwi crosses, and certainly Sterling Ki and Kiwi dollar are definitely something that we'll look at. We'll take a look at Sterling dollar, Sterling CAD, and then we'll segue into the Euro dollar and dollar CAD before taking a look at gold and crude. If there's anything I didn't mention or any trade setups you guys want to specifically cover, as always, feel free to throw them on the message board. All right, let's jump right in, shall we? Here's what we looked like last night on the dollar index. The basic focus here for the dollar index is 99.53 into the high day close from January, which comes in at 99.53 into 99.43, which turns out to be a nice clean 618 extension from the decline off the highs. So certainly that's kind of where we're sitting on right now. You did break the underside of this downside parallel, and it's offering resistance right now. So the focus is on this tight range. I know it's extremely tight, but price action has been in contraction. So if you see a topside pop, 100 is on tap. Our bearish invalidation is 100 spot 40, 100 spot 39. It's a 618 retracement of that range from the advance off the lows last month. But it's also former slope support and the opening range highs for the week. So really nice region of which to hold as our bearish invalidation level. What do I mean by bearish invalidation level for anyone who's new to the room here? It's a level at which if it broke, our fundamental bias, well, I guess for us fundamental is the technicals, but our fundamental bias is changed or it's invalidated. So we're no longer looking to fade weakness. As long as we hold 100 spot 40, I think that's the game plan. Once we clear 99.43, to the downside, there's really not much till 98.70. You might see a soft target here just at the highs from back in October. That'll take you into like the 99 figure, 99.10. But this is really the major area of focus. And again, over the next few days, that 200-day moving average is going to sneak right into that pocket. So that's 98.70. I think on the piece yesterday I put 98.62 into 98.69 to give you a little bit of a pocket there. But that's sort of the major region of support on a downside break. So what does that mean for near-term price action? Well, before I jump into the live chart, here's what the 4-hour chart looked like last night. We were noting some slight divergence as you were making that new low into the week. And there's that key support region right here. So while above this or shorts into this region near term, yeah, they're at risk. In fact, if you take a parallel of that same slope that we've been working with and just extend it off that low from the 12th, you could see that it caught that low perfectly, and that converges on the same region. So yeah, into this region, shorts are at risk. You'd expect some sort of near-term recovery. Broadly, you want to stay bearish below 100 spot 40. I don't think we get quite that high. but the risk is there. Okay, here's what the intraday chart looked like again on a 120-minute, 2-hour chart last night. Even more building divergence, and you had that clear-cut trigger. Okay, 3-point trigger to the upside. If we do get the break, you'd expect some sort of near-term recovery. Here's what it looks like. All right, I added that trigger afterwards, so let me put it on for you here on the live chart. We're still there right now. We bumped right up against it. Price action still holding former slope support as resistance. The focus is on this key range. Okay, if we do get a topside pop, like I said, first up 100, which is 2015 high day close, nice pivot in price. You're staying bearish well below the weekly highs. That key pivot at 100 spot 40, 100 spot 39. Downside break, again, a soft target right ahead of 99. 98.99 is actually just a pivot in price. That's a gap that we never filled from back here in November. But really 98.70, 98.69, this is the key region with the 200-day moving average there too. All right, so the levels are exceptionally clean. You're looking for a possible near-term recovery here in the dollar index, ultimately looking for that rally to sell. Any questions on the DXY? Michael, in commodity sector, please add nat gas and copper. Natty and copper. Gotcha. Okay. That is the dollar index. As far as the dollar data is concerned, do keep in mind that tomorrow we do have on tap the durable goods orders, and that's really going to be the major print that we've been waiting for all week. This is going to be, by the way, today at 10 o'clock you do get new home sales. Not a major market mover by any means, but something to keep in mind. Durable goods orders tomorrow will be big. Okay, 1.3% is the expected clip for the February preliminary read, so we do get a secondary read on this and adjustment, but the preliminary read is expected to show a slight move down to 1.3%. Durable X transports also supposed to uptick. Okay, so supposed to buck the broader trend. Non-defense X air, okay, is the one that you want to be looking at. That's something that's used as a good gauge of business investment, and certainly that is expected to come back from negative territory with a print of 0.5%. Expectations are all over. Long story short, with such a bright-sided Fed and the market's starting to price in more interest rate hikes on a stronger read, might be that trigger you need to get a near-term recovery in the dollar. Again, ultimately, I would be looking to fade such strength. Okay, next up on tap from last night, let's take a quick jump into the Aussie dollar. Here's what Aussie looked like. We've been following it all week long. The major play for Aussie was the fact that we came into a critical resistance range. And I don't want to beat this up because I know we talked about this at length yesterday. That was 77.35 into 77.56, huge key region of resistance. It's capped. This is the fourth, I guess you could say fifth if you count right here, attempt at a rally through this region and failure at that level. We took us back below the monthly open. The opening range low for the week broke. We talked about this yesterday, shifted the focus lower. The near term has come into some support. Okay, well, let me take that back. There's still some support lower down in Aussie. I don't think you're quite there yet. You're seeing a little bit of a loss of steam here. I think broadly that's due to what we're seeing in the greenback. But the focus is still on a pullback a little bit lower towards that 76.09 level. Would be a great region. Start looking for some support. Even lower at 75.90 or so, you have the 618 retracement of the advance. So looking lower in the Aussie from the daily perspective, the only thing I want you to focus on with this chart is this critical resistance and the pivot back below the monthly open. Okay? Now, this is where it gets juicy. Here's the near-term chart that we've been following since the start of the week. We added this on yesterday. We were citing a downside bias while below 76.90. The weekly open offered some really nice resistance. The pullback sat here for a little bit again at confluence support before breaking last night. And here we are with the overshoot. Didn't quite make it down to that 50% target. That was 76.20. We bottomed at 76.24. Still could get that stretch, and that's what I was looking for. If you're holding shorts, I'd have a stop at break even at this point or above 76.50, but I still think you get that clip of 76.20. So I'm looking to see if we can get that 50% retracement. 75.90, like I said, would be a nice 618 retracement. That'd be a nice spot to look for a possible rebound for a long play. That said, you do have divergence into this low, so be weary. I wouldn't be looking for any new, fresh, short exposure down here if you're not already short. I'd be looking for a rally back towards the weekly open, former basic trendline support as resistance. Or if you break 76.20 on a retest of resistance, might be another play into 75.90. But the picture looks still pretty good for the Aussie. No change to any of the levels from yesterday. We got right into this support region, key support, 76.50, and we broke it. So you stay bearish, again, below the monthly open, 76.50, below that parallel. Now, there are a lot of Aussie crosses in play, and if you want to play the Aussie dollar, which typically, I guess I can say over my career has been the trade for me, all the Aussie crosses, but let's just say you don't want to get into the Aussie dollar. Aussie CAD is a beautiful setup. I highlighted Euro Aussie last night, which also is a good way to be able to be long Euro and short Aussie. I don't think you want to, again, position here for the long side just yet, but another opportunity where I think the directional bias is pretty clear. But certainly for Aussie, you want to be looking to see if you can get that stretch into 76.20 or even 75.90 on the downside. Let me just see one thing real quick. Okay, any questions on Aussie dollar? That is number 2. Number 3 is Aussie CAD. And I had Aussie CAD a little bit cleaner of a setup than Aussie dollar, to be quite frank with you. We've been looking at this since the start of the week. If you guys recall the update from the 19th, we were looking at this key resistance range right on the Sunday open. It was defined by a nice Fibonacci confluence. Here is Aussie CAD. And that region was 103.08 into 103.11. Okay, 88.6 retracement from the decline off the highs of November is 100% extension off the lows. That's really the major play. And then you had the upper median line parallel. So obviously, on these crosses, the overshoot, the throw over, the false break, whatever you want to call it, push through 103, failure, and the quick reversal. Again, once you got back below that 103 level, it was pretty much, sayonara. So here's what it looks like, or here's what it looked like last night. We had broken below the the weekly open, the dotted lines, and the weekly opening range low, which was also those dotted lines. Kept the focus lower. Looking for support at 101.71 into 101.75. You had the monthly open in purple. Those dots, you had confluence support and a basic 236 retracement of the advance. Okay, we're there right now. So now, where do we go from here? Well, very similar to what I'm looking at with the Aussie, right? You're coming into some support, maybe another stretch lower, a probe into the 101.70 handle, 101.70 region, but be prepared for a little bit of a bounce. I'd be looking for that bounce to offer some short positioning. We are ultimately looking for the break below 101.70, subsequent targets at 101.20, and depending on where we are in time, keep an eye on that 50 line. Okay, that would take you basically into the one handle or excuse me, one spot. What is that? 0090, and then 0070 right here would be a basic 38.2. And those would be some nice highs too from January of last year, spike highs in February, or what is that, March? Here's what the intraday chart looks like. And here's what it looked like last night, okay? So pretty clear cut and simple. You're at support. Momentum is in oversold territory, so as long as it stays down there, guys, I wouldn't try to necessarily get too cute with it. That being said, I'm very interested in a rebound here. You got the monthly open, the 236 basic retracement, and slope support. And as I said yesterday, it's too early to rely heavily on this slope pattern. I usually don't like to play the pitchfork aggressively unless I have some sort of rebound off of an initial 50 line, a median line parallel, the upper median line parallel, something to give me some sort of confirmation that the market is in fact following this gradient or slope. That being said, this median line converged on a region of importance anyway, the monthly open 236 slope support. So when you see these, gives me further conviction. And here we are with a little bit of a rebound. Again, I'm not opposed to playing the rebound here with long exposure. If you're going to look for another entry, if you're not already long, look at those former swing lows. Would be sort of a stop I'd be interested in on a long scalp. On a target, if you are going to play the rebound, you want to be very nimble here. This is a counter trend move for the near term. Okay, keep in mind this is a wider range, a little bit of a wider range. You got 102.09 would be a basic 236 and a really nice pivot in price. Okay, all the levels are pretty clean. I wouldn't necessarily, yeah, they're all pretty clean. Where would I start to look to fizzle it out? Well, if this formation is in play, the 50 line comes in. I'd be looking at this actually, to be quite frank with you. The 38.2 line actually gives us nice support here, nice resistance here, nice resistance here, nice resistance here, break, nice support here. And that would suggest that you could see a bounce as high as like 102.30. Okay, long story short, if you're someone who's a little bit more conservative, what you want to be doing is looking for a rebound here near 102, near 102.30 to get back on the short side. Okay, you're just coming into a confluence support. We're coming off of a major long-term daily resistance, and certainly the picture and the outlook for the Aussie being bearish certainly helps us here. You had some building divergence all up into these highs. So there's a lot of reasons for the broader picture to suggest more of a correctionary breakdown. The rebound here, it's going to be short-lived. It's very, very nimble. Again, you'd be looking to play a short from 102.30-ish, even as high as maybe the weekly open, but nice entries. Downside break, you're looking for 101.40. And then again, the lower parallel at 38.2, 100.70 would be a basic 38.2 retracement. Basic, basic, basic. If you take a parallel here, actually, it might converge right here. A parallel off that low. See that? Dollar yen just hit Jamie's swing entry. Yeah, I really like that entry, as I was saying earlier. I think dollar yen could really make a move to the upside. We'll come back and look at dollar yen in just a moment. I think this is all just exhaustion. You're still getting divergence. Look at that. Okay. Sorry, we spent a little bit extra time here in Aussie CAD because it sparked my interest, but any questions on Aussie CAD moving forward? Pretty clear-cut, simple trade. Yesterday we talked about this support being the major key support, near-term bullish invalidation for the upslope. We're there now. Look for a near-term rebound. Ultimately looking to sell that. A break below 101.70 really opens up subsequent downside targets. So a beautiful setup, unchanged. Again, you got that false break earlier in the week, but ever since then, she's been a charm. Okay, that's number 3. Next up, and another CAD cross of interest is Kiwi CAD. As I said yesterday, the RBNZ was a bust. You didn't really get much. They were kind of, well, there's room for depreciation in the New Zealand dollar, which is a constant we hear from them. They talked about, growth being pretty decent, expecting an upward or a pickup. Okay, they were talking about policy will remain accommodative for a considerable time period, sees uncertainties around the international outlook. Then they would soften it by saying further depreciation in the Kiwis needed. Sees inflation returning to 2% over the medium term. Further depreciation was a thing that came up like a million times. Inflation will be variable over the next 12 months. So they basically said the growth outlook remains positive, but everything else is up in the air, which leaves us with no new material developments. Remember yesterday in the webinar we talked about that seesaw effect where there was no one expecting anything, and if there was any shift in policy, it's like someone getting off the other side. I would have expected a nice clear-cut break of this range we've been looking at below resistance. Well, didn't happen, okay? Didn't happen, and it was kind of a flop. We didn't get anything new. So where do we go from here? Well, I think you have to respect the same exact game plan that we've been following all week long. We came into the week saying, look, Kiwi CAD's at resistance. It's setting up the weekly opening range just below resistance. Look for a break of this range. Bearish invalidation is still up here. So I'm looking for shorts against this region. I've been looking for shorts against this region all week long. On a topside break, if we get stopped out, look for shorts against this region. This is the broader picture for bearish invalidation. We need a break below the weekly open, a break below 93.47 to really validate at least a weekly opening range break, looking for those subsequent downside targets. You're still in that range. Game plan remains the same, 94.33, 94.23, near-term resistance, broader bearish invalidation. You're still waiting for that break to the downside to get this thing going. Critical area of resistance, excuse me, on the daily chart. 200-day moving average, basic 38.2 retracement of the decline off last year's high, 2016 open. I mean, you name it. It's all right here. All right, so outlook remains unchanged. Nice weekly opening range, still in shape. It's Thursday. If you get a break of this, which I suspect you will, you'd look for that late week stretch into the close of the session. Questions on Kiwi CAD? That's number 4. Okay. Next up, Euro Oz. Is Pooja in the room? Pooja, I see you. There you are. I was thinking about you too when I was writing this one. So we were following this last week and we were complaining kind of this thing was all over the place. But look, the targets have actually been pretty decent. With what we're seeing in relative price action with Euro and Aussie, I still have a tilted upside bias. I do think that upside bias looks like it could be losing some steam here on the rally, but it's almost approaching near-term resistance. So I just wanted to highlight that last night. That region is still 141.72. We talked about that last week. We turned a little bearish at that region last week, if you remember, as we kind of came off this confluence region, 50% retracement to the 100-day moving average, slope resistance, all was right here. That pullback messed with us for a little bit, right? It looked like it was going to make a break of this slope. It actually did make a close down there. I kind of threw my hands up and just sat on the sidelines. Then you got that crazy reversal here on the 21st, and the upstretch is coming into that same region, and now it's even a more highlighted confluence, right, with that 100-day and 50% retracement. Could be losing some steam here. Okay, here's what the intraday chart looks like. And here's what we looked like last night. So you want to stay constructive above 104.15. You're looking for a stretch into 141.72. This is a region, again, as well as 142.18. Both of these, in my humble opinion, areas of interest where you could see a little bit more of a kickback, but this is sort of the breakout zone. Okay, once we clear this, there's a lot of room to the upside, in my opinion. Your next target is until 143. That is a critical area of resistance. That's defined by the 618 retracement of the entire decline, and it's the 2016 low day close. So big region. On a breakout above 142, you got a nice 80 pip realm of rally here. I think that'll be pretty sharp if we do get it. Near term, watch for that stretch here into 141.70. Euro Aussie pinched me a bit in Europe today. I thought we would make it to the lower parallel, but stops got hit on the short on on a short 141. Yeah, you were looking for a drop into this. Yeah, the downside I think on this one, Eileen, I'm so sorry, Pooja. The downside on this one, you want to be careful just because objectively this did make, it was a very short-lived opening range for the week, but it did break those former range highs, 140.15, and back above the median line. So I hear you on wanting to play the pullback. A short-term guy like me would play that all day long. And you'll get stopped out sometimes on those. But this is why on these pullbacks you want to be a little bit lighter on the leverage, just because on the breakout above the median line inherently, you're looking for a stretch into the upper parallel. So I'd rather be trying to get pullbacks to get long. That being said, an area of which, again, I'd start to look at what you were trying to do last night, Pooja, is up here. It might be a nice reason just for a little bit of a kickback. Again, a quarter of the daily TR isn't too big here, so it's something to work with. But even that, eventually, you would look to buy again. We're working under the assumption that Euro-Oz is trying to put in a pretty major reversal here. Price action, there's been a lot going on in both those crosses. But just be mindful of this near-term resistance. I do like it higher, generally speaking. And that's Euro-Oz from last night. Any questions? This cross has been a little bit of a thorn in our side, but I think you're getting a little bit more clarity here. If you haven't went over it yet, Sterling Kiwi, says Steve. Hey, wouldn't you know it? That's actually right next up on the list. So it's coming right up, Steve. Any questions here on Euro-Oz before I move off, or anything from last night? Okay. The previous update, just a couple of select ones I want to go from that. Sterling Key and Kiwi Dollar being two of them. Sterling Key looked like this. Where art thou? Okay, so for British Pound versus Kiwi Dollar, look, we've been talking about this resistance range since last week, since last month, essentially, at this key zone between 77.36 and 77.98. Let's just call it 78. Keep in mind, this is a huge area of resistance on a daily basis. I really can't stress it enough. Here's what we've been looking at. Very, very basic. Nothing fancy here. Basic channel resistance or slope resistance, 200-day moving average, 786 retracement of the decline off the highs here, and the 2017 open. All are right here. Objectively, if this breaks, you look higher, period. You would look to say that's a breakout from a price action standpoint. Now, from a trading standpoint, you have some divergence as price action pushed into those highs, and you're at a key threshold. So would I want to get long here? Absolutely not. The long play would be on a break. You'd have to wait out for the pullback into this region, then try to get as close as you can to that key pocket for the break. For me, on the intraday, on a shorter term, I'm super nimble on just trying to, short this. Now, I was much more interested in this trade, as I was saying, heading into the RBNZ, if we got a positive move. If for some reason you got a positive reaction in the Kiwi, I think that would have been a nice short side play here for a pullback. That being said, you didn't get much. Kiwi strength from here. We'll go over Kiwi Dollar next, but I haven't, I don't have too much conviction in trying to play the short side. Let's just say that. I do think British Pound is showing signs of near-term exhaustion and losing some steam. So yeah, the drift lower would be welcome. I'm not crazy about getting long Kiwi. That's my problem here now. I think the long Kiwi scenario could have been the RBNC. Now that we're past that event risk, I just don't see it. So we'll see how this pans out. Enough sterling weakness could make it push lower. You're basically, the correction play would be a move below the weekly open. You saw that hold as support yesterday perfectly into the U.S. Open here, right at 76.27, 76.26. That's the weekly open. So perfect hold here into the U.S. trade session yesterday. So that's really where you need to break to get the move towards the lower end of this consolidation pattern. But could be just a sort of rising wedge breakout. If it is, 78's your marker. Okay, keep in mind another wide range ATR. The next target with a break above 78 isn't until 78.60, and that's just an 88.6 soft target. So not for the faint of heart again, but if you're looking for some volatility, you're looking for some of those larger ATRs, this is your pair. Near-term risk for a move lower, in my humble opinion, still. But ultimately, you'd want to be buying that pullback. Questions on Sterling Kiwi? Steve, does that answer your question, or do you have anything specific on Sterling Kiwi you want? Here's what the 30 looks like. You're seeing some waning momentum here. Nice reaction. I mean, you could see another probe into the U.S. trade session, but largely speaking, be on the lookout for some near-term exhaustion here. I'm watching that 78 level. Yeah, it's really big. I mean, it's the yearly open, okay? But the fact that the daily chart has all those things converging, including the 200-day moving average, which we haven't touched, guys, in Euro-Oz, since when? We haven't touched the 200-day moving average since back here in 2015. And obviously on that break, well, it obviously was the fuel that we needed to get a much more substantiated drop into the close of that year, and we haven't touched it since. Okay, so sort of a big region, You'd expect this to be a pivot of either a much sterner move to the downside for a correction, or if we do break, like I said, there's a lot of room to the upside. So make or break point here, near term, £4 Kiwi. He says, no, that was good. Thank you. Hey, you're more than welcome. All right, moving right along. Let's take a look at Kiwi dollar on the back of the RBNZ. That will be number 7. Kiwi, where art thou? Here we are. All I wanted to highlight here is that you've got a weekly opening range that never gave out. You got the 38.2 retracement, 70.75, which I'm still offering as resistance. You got the weekly open, which is also the weekly opening range low, and that comes in at the 70 handle. Look for a break of this range. Broader focus is lower, while below this parallel here. Currently comes in somewhere around 71.55, 71.60. So even if you get one last stretch higher, I'd still be looking for possible short entries here. If it just breaks down, I would still be mindful of 69.50. The daily chart still has that as a big region of support. Here's what the larger scale picture looks like. Some basic parallels. So you still have a little bit of a support structure there, even if you move to the downside. So, I think Jamie was talking with you guys here in the webinar yesterday. I had a game plan going into the RBNZ. RBNZ offered no volatility. What do we do now? I guess you sit on your hands and look for another pair. So I'm not really turned on to any of the, or the Kiwi dollar specifically. I think Kiwi CAD is still my favored Kiwi cross. But for Kiwi dollar, just to give you a quick update on that, you got to wait for a break of this weekly opening range. I think this could go either way. A topside break, look for that rally towards the upper parallel. A downside break, you still have to contend with 69.50, but a break below there, the targets get pretty clear. Whoops. The targets get much clearer. You get 68.60, 68.27 would be the 2016 open. That converges on some nice median lines. All right. Any questions on Kiwi dollar? No Momo just yet. See if we can't get a pickup in some of this volatility here. Number 8, let's go over the British pound. Here's what sterling looked like on the 20th. Okay, we were highlighting a key resistance range to open up the week. That resistance range was defined by this zone right here. You had the 2016 low day close. You had slope resistance. The monthly open was there. The 100-day moving average was there. Long story short, we broke above it. Is the breakout legitimized here? We haven't gotten a close above it just yet. So I don't want to get too crazy with it. This is a trend line that we added in the webinar a couple of days ago. You can see that we've pushed through. Looks like you're getting some near-term exhaustion in near-term price, which is why, again, on the sterling key, which is coming into that major area of resistance, it's tough. It's tough to get through, you know, because, again, sterling is kind of losing steam here. Kiwi strength is tough to, you know, sort of justify. Nonetheless, I digress. For British pound, here's what it looks like now in the intraday. Okay, looks like a basic break and test of resistance as support here, although you didn't get quite into it. But again, the divergence in near-term momentum has me kind of scratching my head, looking for a little bit more of a softer touch to the downside to get back long. Long story short, I want to stay constructive above the weekly open, 23.90. Topside targets 25.78. Key resistance near term is still 26.71 into 26.80. So no change to any of the levels. Right where from yesterday. These are the levels from earlier in the week, so this retracement is actually null and void, but these topside targets remain unchanged. Questions on British pound? Heading into the U.S. session, I wouldn't be too surprised to see some breakdown or at least a pullback. Keep in mind, last night, obviously, guys, you know, our thoughts and prayers are with everyone in the UK with everything that happened yesterday, but looking at it from a price action standpoint, the advance couldn't even be fueled by really good news from the retail sales sector. You had stronger than expected sales on everything. Ex-fuel came in at 1.3% versus 0.3%. Again, core year on year for that same print came in at 4.1 from 3.2. So the thing is, there were some slight downward revisions across the board, but the upward print was much stronger than expected. Even that couldn't fuel sort of the next leg higher, as it were, which is what has me thinking exhaustion. If the trade was up and at arms and there was enough push behind it, you'd see a print like this at least fuel like a stretch into an exhaustion high before pulling back. But the fact that that couldn't even fuel much of a push from the high that we made in U.S. trade, or the earlier session rather, you know, has me thinking you might be seeing some near-term exhaustion. So stay constructive above the weekly open, former slope resistance, this 50 line, this sort of pocket region to the 24 handle, looking for 25.78 and 26.70. Questions on pound? Next up on tap, that was number 9, is pound CAD. Pound CAD is another CAD cross. That's very interesting. Here's what pound CAD looked like. Whoops. There she is. Or here's what it looks like now. Here's what we looked like earlier in the week. And we were talking about this major critical area of resistance. Unlike pound Kiwi, which is still testing that critical area of resistance, pound CAD has already broken it. So who's the liar here? Who's the one who's leading? I think it's pound CAD. Okay, pound CAD broke to the upside. That's leading, that is. Pound CAD broke to the upside with definitive approach here earlier in the week. This was the 100-day moving average. It was a 2016 low day close. It was also break of this consolidation pattern that we've been watching for well over a month. And it was a pretty well-defined break in momentum even, with the momentum signature clearing for the first time a near-term slope off the January highs. This was the cleanest one out of all the pound crosses. Okay, the upside now looks, again, like it could be losing some steam, but I'm still waiting and I'm still aiming for 67.57. It's a 618 extension off the low. Just higher at 67.77, you have the 200-day moving average, and that converges on the 50 line. So near term, the breakout still has room. We talked about this yesterday, guys, and the actual measured move of the consolidation pattern targets 169. So I think there's a lot more room to the upside. That being said, on the near-term approach, watch 67.58 for a pullback off that region. You're constructive above 65.25, 65.24, this region here. All right, so scrap that. And whoop. And we'll move that right over. Looking at this from the intraday, here's what it looks like now. And here's what we look like then. So again, very, very clean in that you had a very nice weekly opening range taking shape, Monday, Tuesday stretch. Again, this was published on the 20th, so this is right after the close of trade on Monday, basically. And you had that nice range high, range low, right around the weekly open. Okay, that broke, came back, tested the weekly open as support, and validated the larger break that we were wondering about last week. Remember, into Friday, we talked about this on the Monday webinar. Was this a break? You'd expect to see that kind of shoot off. It sat there for a little bit. Classic fake out. It's a Sterling cross. It's going to do Sterling things. But at the end of the day, it turned out being a nice breakout opportunity. So again, the upside, still see possibility for a stretch into that 67.57, 67.90 region. That sort was the targeted breakout range. But near term, like I said, you're seeing some exhaustion on the pound crosses in general, I think. So you look for a pullback, stay constructive above 65.25, 65.23. Questions on pound CAD? Keep in mind, you do have CAD CPI data on tap tomorrow. Here's what that's supposed to look like. Supposed to see a little bit of an uptick a little bit of a downtick rather on the month-on-month, but year-on-year is supposed to stay pretty sticky at 2.1%. So we'll see if there's any deviation from the expectation here. That being said, CAD cross is in play heading to the close of the week. Any questions on Sterling CAD? Going once, going twice. Moving right along, Euro dollar, number 10. Into the close of the week, here's what Euro looks like. I highlighted this chart on Twitter a couple of days ago, and we're still holding that resistance range, 108.20 into 108.22. You're basically looking at the 50% retracement of the broader decline off the highs that we made back here in November of last year. And you're looking at a basic swing low from back here in March of last year. So some really nice symmetry along this level. We talked about this yesterday in price. Support, 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 resistance, resistance, resistance. So as always, I'm losing my voice by the end of the week. I'm so sorry, guys. As we head towards the end of the week, I still think you can make it back towards the median line. This region here, 107.60, 107.46 would be a nice sort of stretch low. I hope this thing would find some support, but not too surprised to see some consolidation here after that upside stretch and break through some pretty big resistance regions. So immediate threat, yeah, sure. I would look for a little bit more of a lower pullback here, maybe another 40 pips to the downside, but really interested in that 107.40, 107.60 range to see if we can get some exhaustion, maybe some support into that region for the final stretch higher. You're looking for a stretch into the upper parallel. You're looking for a possible stretch into 108.72. Longer term, I'm looking for the larger breakout here. I'm just very cautious as we approach this region of which price action has shown some major pivots over the years. Okay? Let me just take this for the whole chart so you can kind of get a better grasp of how meaningful this 108.20 level has been over the last, 5 years? This is 2000, last 2 years, 3 years. Okay, so immediate threat for pullback, looking to stay constructive above 107. Topside break looks for 108.72. Questions on euro dollar? That's number 10. Number 11 is dollar CAD. Here's what the loonie looks like heading into the close of the week. So no change to any of the euro levels. By the way, just as a drill here, I was doing this morning. If this is a near-term high of which we can play the correction, if you tack on a retracement, the levels are beautiful. 236 comes in right at, whoops. 236 comes in right at that level that we were highlighting, that swing high from last week. The 38.2 comes in right in at that longer 618 retracement that we were looking at, that pivot zone. So that gives us further conviction on levels that we're using right now as possible support for the pullback. Okay, moving dollar CAD. Here's what dollar CAD looks like. So what an open. You know, the start of the week, dollar CAD looked like this. Okay, this was the level to beat at 132.50 to really validate more of a downside break. Well, we came and we stretched just as low as 32.63 before making a rally. The rally coming right into our bearish invalidation level, and that was 134. And then here we are right back at support. This is the focus. This is what you need to clear. Just lower, you have the monthly open. 33 is the level to give out, specifically on a close basis, to get this thing going. The opening range lows for the month coming at 32.84. You have the monthly open, you have the 100-day moving average, all at 33. Really key, really key. So could you get more chop here? Could you get more sideways or even another high? Wouldn't be too surprised. I kind of still want to leave our bearish invalidation at 34. I'd be still looking for short entries against that region, but if it gives out, 34.30, 34.40 would be a topside region, of which, again, if you get an emotional stretch, maybe durable goods, tops expectations, and you get dollar just ripping real quick, that's sort of another exhaustion region. But this is the focus. I can't sell into this region. I need to see a break below this region, sell a rally, or another rebound higher to get back on the short side. That being said, as ugly as the daily chart is, this isn't all that bad now. I was kind of hating on dollar CAD as we came into the close of last week and even the open of this week, to be honest with you. But confluence regions here are pretty good. Again, this was, I know we overshot it, but the monthly open on slope support, you got to give it some grace. So I'm thinking like maybe boom, I don't know if we get quite 34 again, but maybe, a stretch high back into like 33.70 and then look for the breakdown below the monthly open. Questions on dollar CAD? That is number 11. Okay, let us jump into your questions and some of the commodities. Sterling key, we covered, Steve. I got that. Okay, let's do gold, crude, and then we'll take a look at nat gas and copper, which was a question for Vlad, I believe. So really quick, gold continues to impress, continues to outshine, to get a little corny, but just hit literally during this webinar, I think, the 1252 target that we've been talking about. Now, that's the high day close for gold. It is also just beyond that. You have the upper median line parallel for this formation. Another reason, I think we talked about this last week, about being too quick to remove your median lines when markets invalidate the upper or lower parallels. This is a perfect example of how the formation still held constant, right? Even though we invalidated the lower parallel. So long story short, I think gold near term now finally is at resistance and actually is at risk for a pullback. It's been quite a stretch. We've had 1, 2, 3, 4, 5, 6. This would be the 7th day of consecutive advances. You got the monthly open here. You got the monthly opening range highs and the high day close for the year. On a topside break, Just because you should always have your levels mapped out. 200-day moving average comes in right around 1260. Okay. And there's nothing beyond that till 1277, 1278. And that, when we talked about 1277, 1278 back in the first quarter, people were, or even 1250 for that matter, people were kind of just looking at us. But I think, you look for a pullback here. There's exhaustion in momentum. You're getting slight divergence, albeit above 70, but I'd be looking for a little bit of an exhaustionary play. Top side break, the targets. 1260, then don't touch this thing. If that breaks, don't even touch it till 1270, 1278. This is huge. My favorite Fibonacci confluences, I've told you this a million times, 100% extension off the low, 618 retracement off the high, or vice versa. 9 times out of 10 will be a decent pivot, a decent rebound, or a decent breakout. So the levels are exceptionally clean. Look for some near-term exhaustion here in gold. That would coincide with a near-term rebound in the DXY. Again, picture is looking pretty decent. Questions on gold? Crude looks like this. Looking a little messy as far as I'm concerned, but what can I say? The near-term pick, the daily picture still highlights 47 as major key support and 48.70 as major key resistance. You have the 200-day moving average, former slope support. Down to the downside, you have that 618 retracement and the range lows for the month. Intraday chart looks like this. Looks to me like a basic trendline break of support, test as resistance, but at the end of the day, this long-term 47 region is still your major key region of support. So look for consolidation. A break specifically above this would make me feel much more comfortable about attacking a near-term long side play in crude. But pictures become a little foggy here, and that's okay, guys. You're not going to always have the answer. You're not going to always have clarity. We started off the week looking for a rebound towards the median line. We didn't quite get to the median line, but boy, did we get the reversal off it. Okay, and from here, you're right back at key support, which is what turned us bullish last week. So what do I do from here? I don't know. I'm going to sit on my hands. You're right below. You're almost unchanged on the week, slightly lower into support. I think this thing chops down here a little bit. I think you do get a rebound. Ultimately, you want to sell that rebound. Okay, considerations for where we are on the weekly charts will always be something that will be paramount when trying to gauge specifically these larger commodity turns and larger commodity moves, waiting to see what the weekly close looks like, again highlighting the 52-week moving average and a 236 retracement. Right about where we are right now, just lower. Questions on crude? All right, moving into nat gas. I haven't taken a look at that chart, so let's see what that's doing this week. All right, give me one sec here. Vlad, let's see what's going on with nat gas. Okay. Okay, right off the bat, just by looking at this objectively, again, I haven't checked this out in a while. I don't think since the start of the month, because I don't have my monthly marker in here. What was I about to say? Yeah, right off the bat, it looks like a 1, 2, 3, 4, 5, which would suggest you're looking for a little bit of a near-term exhaustion sometime soon for a pullback. I'm going to go ahead and highlight this high right here. It's also the close low for January, just above where we are right now, and get rid of this 38.2. Okay, so that puts the impetus on this region. Let's call it 307 into 309. okay, as key resistance near term for nat gas. Momentum also coming into 60. Be watching resistance right there. Let's see what the intraday chart looks like. Do a little adjusting. That is not the March high. Put that there. Oh, we already had that highlighted? Good. Okay, so on the near term, here's what I'd be looking at. So we were in this slope for what? 2 weeks? Not even? A week? The breakout led a nice charge. Don't need that anymore. Don't need that anymore. Don't need that anymore. It was exact 1618 into a 38.2. Nice zone of support. Take this to the new high. Now, I do think it can make another probe into this key region, okay, for nat gas. But something I would be looking at is possible play from this type of angle to gauge. Hey, would you look at that? Is that 38.2 line again, causing some support? To gauge how far this pullback would play. And here's your weekly open. So here's what I'm going to say on this. I'm sorry this took so long, Vlad. I haven't looked at this in a while. Look, I would stay constructive, broadly speaking, above 287.70. Basically, it's the opening range lows for the week and a basic 38.2. In the trade, I know that's a far from where you are now, and I haven't been following this, so I'm just giving you kind of key reference points. I'd stay constructive above this. This is still major resistance. Your clear-cut targets to the upside. I mean, I would take a snapshot of this if you need it for your own reference. So the targets here are pretty clear. The question is, which direction does it break first? Do you make the move first for the exhaustion pullback, then get long? Or if it clears 309, sayonara. But you're butting up into a pretty big area of resistance, not only from just, well, let me take a step back. It's just a clear pivot in price, irrespective of whether it's the 38.2 or not, or even the 100-day moving average. You can see the swing highs, former swing lows, close lows, and the 100-day moving average. I'd be looking at that in near term as resistance. All right, Vlad, does that help? As far as copper is concerned, that one we've been following a little bit closer. I like the near-term structure in copper as far as the nature of the decline that we've been seeing. Near-term, where we bottomed, though, this week was awesome. This is a huge region, 786 retracement, just off the near-term advance, 618 retracement off the longer-term advance. Or excuse me, from the decline of, or the ascent off of the monthly lows, 618. Either way, really nice region of support of where we turned from. So for copper, you have to respect this major key support. Here's the daily chart looks like, by the way. You're still within the monthly opening range. And a nice consolidation here near term. I still think you get a bigger pullback. Got all the points. Thanks, says Vlad. You're more than welcome. That takes us towards the end of the session. Guys, are there any other questions, trade setups you want to review, anything at all as we close out the week for the webinars? Remember, Monday we're going to have a special session for the beta use of the SB trade signals. We're going to post the time on that hopefully today. We're going to narrow that down and kind of post that on the homepage, so you can always go to the SB Trade Desk homepage. And the webinar calendar, guys, is always presented for you here. I know it wasn't updated this week. It was a little late, but It's always for you right here. So we're going to put Jamie's webinar. It'll be on Monday after 1 p.m. Eastern, probably more closer to 3 or 4, where Jamie's going to go over the beta system, how that works, how those signals will come out, and then we'll turn that system on shortly after. So look forward to seeing you guys there. You talked about the dollar index at the beginning of every webinar. How do you use it for trading bias? So Steve, I like to use it as a gauge of what base dollar movements are doing, recognizing that the dollar index is in fact 60% weighted to euro. So I completely understand that, but it helps us get a larger visual. You know, you have to always be keeping in mind and considering what do broader market participants look at. For someone on a trade desk or on a mutual fund or someone who's trading some sort of assets for some bank, he's not necessarily in and out of euro dollar, dollar yen every day, right? But they are watching the index. Okay, anyone who's a portfolio manager has always got their eyes on what the dollar index is doing. So I want to know what the broader consensus is in markets. Is the dollar just plummeting? Is the dollar moving higher? And also it can be used as a very strong barometer and relative movements when you're looking at rates. Because when there's a divergence, again, that's telling you something, whether the broader markets are turning on the dollar or not. So I always like to have some sort of base dollar movements. Before we got too deep into DXY, I used to be a big fan of trading the US dollar, which is what Jamie looks at as well. That's FXCM's version of the dollar index, a little bit more narrowed down in that it only uses 4 base currencies instead of 6, and they were all equally weighted at inception. But the widely used dollar index that futures traders are using, asset managers are using, that's the DXY. So Steve, does that help? You can trade it on the futures markets, but for us, if you're trading here spot, it's still just used as a nice barometer. He says, yes, thank you. You're more than welcome. All right, guys, I'll wrap it up there. Have a great weekend. We will see you on Monday. Keep in mind also, Monday is the free public webinar on Daily FX. Again, the afternoon, evening time here, we'll have that special session with Jamie, and then we'll pick things up back on SB on the intraday strategy webinars on Tuesday morning. Till then, best of luck trading. Have a great weekend. Cheers.